All right, welcome everyone to the Monday night, February 24th, 2000. Worst day in market history in the last 6 years or something like that. I'm going to apologize to you up front, and plain and simple, Lance, no joking comments today is all I'm going to tell you. Plain and simple, it was a difficult day. It was a rough day. I'm also going to apologize to you guys to explain. I'm going to feel like I need to explain myself on why I made some decisions on Friday that obviously did not benefit us as well as it could have today. So let me just go through plain and simple. I'm going to start off with this thought right here. 98% of the funds don't beat the market. So why do people still give their money to financial advisors and money managers? Why does everyone just invest in a low-cost index that follows the S&P 500? So plain and simple, 98% of the funds don't beat the S&P 500. Can someone tell me why? Can anyone tell me why? Because people guess wrong. So I would agree with that. Someone says the S&P has better managers. The S&P actually is just an index, the S&P 500, so it's not really managed. It's just a group of stocks that, plain and simple, is the U.S.'s best explanation of I guess, the well-roundedness of the economy. It's a joke. Got it. Duh. Well, you are correct, though, because number one, most funds are created by a manager that's back tested everything and thinks they found the right mix of higher tech, because it seems like the Nasdaq, at least in the last 10 years, has beat the S&P 500. Mid caps over 20 years have beat the S&P 500. But plain and simple, failure in logical reasoning. No single money manager has been able to beat the market consistently 20 plus years. But if you look at any given year, you can find a set of funds who did manage to do it. So, thought process for me. In all honesty, I handily beat the S&P market in 2006, 7, and 8. 2009, there were groups of my clients that did not. In 2010, where the market was down 0.5%, I was down like 5 to 7%. I then had a pretty good run. I think it was 2017 or 2018 when I had my next run. In fact, Keeve, you were here. So I'm pretty sure it was 2018 that maybe we had a run down where, again, a certain group of my small people didn't beat it. My mid cap people kind of beat it. My big guys beat it handily. So it's unusual, because I'll be the first one to say that, yes, you know what? I don't beat it every single year either. But it was 2018 that Key was typing in that we had the drawdown. So yeah, 2018, it was like my smaller guys, my medium guys didn't beat it. My big guys beat it handily. Most likely because we had one of the big caps that beat. Disney wasn't doing well. It was probably Visa that year, to be honest with you. So number two, they believe that they're the exception, that even though 98% of the people don't do it on a almost regular basis, some people think they're the 2% that can do it. For most clientele, number three, they're unaware that the high fees justify using them. Out of curiosity, have any of you heard about any hedge funds recently? The three big ones that I think of were Madoff, Bradford's, and Warren Buffett. And we know Madoff's were made up. Bradford lied and overvalued a island. And I thought Buffett maybe hadn't beaten for 9 out of 10 years. But he still thinks they're going to catch up, and I would agree with him. And then number 4, I like that one, being totally clueless, right? Being invested but having no clue what their fees are, nor what constitutes a good return. These poor souls who hear from a friend of a friend about a great financial advisor and get taken advantage of. So, plain and simple, Hurley Investments took a pretty good hit today. We did not beat the market. Plain and simple, we did not beat the market. And I'm going to see here by, how close was I though? 3.35%. Go 3.35% for 400 divided by 11600. 3.44. So here I'm down 3.44 and a 3.33% day in the market. It's frustrating. It's ridiculously frustrating. So the question is, Kevin, what happened? Well, what happened last Friday? Can someone tell me what happened last Friday? There you go. Last Friday, options expiration. And options expiration typically means a down day on that Friday. And then what happens the following Monday? Anyone know? What happens the following Monday? Perfect. Yes. To both of you. People get more cash put into their accounts, covered calls away stock ownership. They get cash put into their accounts. Their option strategy shut down, and they're cash rich the following Monday. So typically we'd have a big up day on Monday. But what happened to us over the weekend? It actually happened on Saturday. What was announced on Saturday? Someone type in and tell me, what was announced on Saturday? And it can't be Keeve, and it can't be Lance, neither one Dave or David. Rich, you can't answer either. What happened on Saturday? Right, bingo. Now, a lot of people think it was announced Sunday or today, but on Saturday it was announced that there was an outbreak of the coronavirus in Seoul, I want to say Seoul, Korea, or South Korea. But correct. There was an announcement in Korea of an outbreak of the coronavirus. So, taking a quick peek at this chart, if you take a quick peek, what do you see on Friday for Apple? If I was to highlight on Apple what I saw, what do you see? You guys are looking at my chart now. You guys are answering quicker before. What do you see? There we go. Two of you wrote in at the same time. It seems like it's at support. Had a down Friday, that's explainable. Had support the 50-day, had support at the pivot point. So it looks like it had support. Hence, we didn't do a lot of rolling of protection on Apple, but we did have a bear put in place. We did have some protection on Apple in place from 315 down to, 317.50 down to 305. We have $12.50 to the downside, right? So we felt we were okay there. If I go ahead and let me introduce Baidu to you. Baidu literally stopped right on the dollar. And of course, pretty interesting. We were positive. We stopped right at 328.99, but it's actually 329 something. Didn't have our crossover here. Weren't oversold on the Williams percent R. So again, on Friday, Baidu showed us exactly what we felt we needed to see, and we thought we were going to be in good shape. Excuse me, that was Boeing, not Baidu, Boeing. Baidu is next. Baidu broke below it. But what do we know about Baidu? Yes, earnings. It has earnings this week, and it's already pre-announced. It's going to beat top and bottom line, and it increased its guidance for the year. Now, unfortunately, that was about 2.5 weeks ago. So will it maintain it? We don't know. But it was, but because I'm in a bunch of long calls that already has some protection built in, I thought we were going to be okay on Baidu. What else do I have? Disney. Same thing on Disney. It was still technical bullish. We had the 200-day that is typically big support. It already tested it, bounced higher. We were looking at a double bottom, and off it was going to go, right? Double bottom, off it was going to go. We should have been okay. So in all honesty, I've set a bunch of these up, but I guess I'm kind of bugged about going through them. I can show you the same thing for Ford at a yearly bottom. I can show you on Facebook. It had the pivot point, and oh, I guess it was just the pivot point, and it was still bullish. What else can I show you? Under Armour, down to its low, bounced off the low, held a pivot point, held a round number, excuse me. Visa, kind of nice to see that Visa was really bullish and it held the 50-day today. I can go through a bunch of excuses, but really what I do and why I'm in where I'm in is for the reason that on a 2008, when we significantly beat the market, it overlooked a 2010, a 2012 where I missed by 1 to 4%, and my other years more than made up for it. But the frustration today really comes from, and I'm making a poor joke here, please live with me, suicide prevention. There are a couple things to understand from a market. So let me go ahead and type that in. There are a couple of things to understand about the market so you don't jump off a building. Number one, when you have a big down day or two in a row, you are looking at a big up day following. And really, that's your key to reset some positions. Well, Kevin, you know, I need to see it. I need to prove it. Here you go. Here's the article. Please feel free to go through it. But here's the simple facts. The 19th time that the S&P has shed more than 2% on a Monday, going back to March of 2009, so the most recent decade, a return of 1.02% on the next day have occurred historically. Now, 17 of the 18 prior instances, the S&P returned a positive over the subsequential week of 3.16 to make up for the 2% loss. Over the next month, there's an average gain of 6.08%. So the probabilities are in our favor, and there's all your data. The Dow Jones is a little bit better. When the S&P drops more than 1% on Friday and then more than 2% on the following Monday, as the index has currently done, Tuesday's gain on average is now 1.5%. The week's gain stand at a 3.9, so it makes it up. The month gains coming is a 6.47. Since the S&P, which tracks 500, began in 1993, falling more than 1% on Friday, more than 2% on the following Monday, 13 other times. The last instance was December 2018. We had those bounce backs. So, as I was looking at this and going through it, I have to, for all intents and purposes, take my medicine. The question, would I have done something different? The answer, after talking to Steve, Jeffrey T. Smith, Michael Verdon, I'd actually talked to Jeff Dunyon today. If I was talking to these experts, would I have done something different? No. If I knew we would have a big drop, then obviously I would have added or rolled protection out. Here's an interesting question. Why don't you always be in a full collar trade? Short call and long puts. And this is going to be a tough question. Yes, pivot points are 30-day support and resistance levels, Ida. And that's also a rather tough one. But here's why it comes down to it. Especially over the last 10 years, that doesn't mean I'm not going to change this. And we might make things different. But the short answer is that is why we don't put long puts or covered calls on or do full collar trades right now. Once you get caught behind the 8-ball, here, anywhere along here, even with a year going sideways, anywhere along here, anywhere along here, you stop making money. You've given up all of your profits and your returns. You can go out 2 years and pay for about 3 earnings events, which means you have 5 earnings events, or roughly 25% of your stock price you're going to pay for in a long put scenario. If you believe in technical analysis, I'm going to ask you, why the hell on Visa would you have long puts through a moving sideways and then moving up? The last 6 months, you would have lost every penny on at-the-money puts on Visa. To give an understanding what that means, probably need to erase this. Let's actually go to trading. Let's go to options. Let's go to Visa. At the money, going out 3 months. Yes, we're doing Visa. So we're looking February, it got to May. It's got to be protected. 200, you'd pay $8. You'd pay $16 of your profits away on Visa. Not gaining any shares of stock, you would lose $16.40 of your profits you would give away with those at-the-money puts on Visa. The market has been bullish. If you believe in technical analysis, you should have your protection on when your stock is bearish. You take it off when it's bullish. Hence, you don't always go protected if you believe in technical analysis. Kevin, what about the 4 people who are currently living off their money with you? And I'd love to say I took credit for this because one person asked that today, and he is really frustrated. 2 of you were not, and one of you hadn't thought, but thought about it and came back to me with this comment. You have cash available for me to go through 3 more earnings to make it back before I have to take money and mess up your caller trading. Thank you. He answered my question for me because, in all honesty, 2 of you guys were okay with it. You said, you know, I know what you're in. I see what you're in. We're going to make it back. We're okay with today's loss. One of you, pretty pissed off, new to the program, doesn't understand options. I gave them the opportunity. I said, I can turn it all into cash, and off we can go. The methodology isn't a guess. Caller trading methodology and the way Hurley Investments manages money is not a guess. It's taking some undervalued companies like Boeing, like Baidu, like Ford, like Disney, like Under Armour, that are still fundamentally sound, that have made some mistakes, but still have good product, good sales, good revenues, good profit margins, good return on investments, return on equity, return on assets, that just haven't moved yet. It's the Warren Buffett way to invest. And yes, he went through a stretch of 9 years where he wasn't beating the S&P. But that doesn't mean the companies that he has are bad. In fact, if I go to Warren Buffett today, I'm going to go down to his first ones. So at 606, that's good for us. Buffett says of dropping stocks. Why would Warren Buffett say a drop today is good for us? I can think of two reasons. But why would Warren Buffett say it's good for us to see stocks go down? Come on, guys. Am I making no sense to you? Are you understanding what I'm trying to tell you, or what? Buy at a cheaper price. They can buy at a lower price. Now, obviously, it's easier for someone to say that has 128 billion sitting in cash, right? Obviously, it's easier for someone to say to buy the dip when they're a billionaire and this isn't their retirement. This is not their living expenses, right? Much easier for him to say it. But a better answer is a shakeup, a correction, a bear market territory allows an opportunity for other people that maybe aren't in yet. I made the comment to Jeffrey Dunyan, I kind of feel like we were out of buyers today. I'm a little concerned maybe there's not enough buy the dippers with cash out there. He said, that would be hard for him to swallow. As I thought about it, the reaction from the market today proved my point, but there's still a lot of money sitting on the sidelines. Warren Buffett said, don't buy or sell based on today's headlines. That's at 611. At 619, he's bought stocks every year since he was 11 years old. I wish I could say that. I have not done that. Pretty interesting. The comment was made, very significant percentage of businesses impacted by the coronavirus. How am I going to say this? I don't see the big concern of the coronavirus yet. It pales in comparison to the flu. We've had 12,000 people die of the flu season this year. And I know 156, 165,000 people have got the flu. This year, it's relatively bad, right? It's like 8 of every 100 people are dying from the flu. 2 to 3% of people are dying from the coronavirus right now. If not less, because who knows if China is telling us the right numbers of people that are infected with it. I was a little shocked that Apple shut down factories, but those factories are up and running again. Now, they're not full of their employees. Apparently, some people are still not coming back, but things are back up and moving in China, at least for an Apple, for a Baidu. I can maybe more understand how the travel industries and the airlines may be hit, but I don't understand technology or Google or someone that produces something. Yes, I understand we're probably going to have a pretty poor earnings in April. In fact, our earnings are probably going to have a lot of our numbers were affected by the coronavirus, which means we'll probably have a bounce back for the June earnings. If I wasn't buying my Apple phone because of the coronavirus this quarter, I sure as hell would do it next quarter. Well, Kevin, there's a backload in supply of Apple products, or Apple components, I guess would be the best way to say it. I disagree. Right now, people can still get Apple iPhones. And there was a time when iPhones were backlogged 6 to 8 weeks. And Apple didn't lose its business because of it. Baidu, people are still going to be on the internet buying stuff. Disney's going to take a month-long hit on Shanghai, which will affect 0.6% of its revenues for this quarter. Let's throw another 1% because of their cruise lines. For the quarter, 1.6% of the revenues for the quarter, they're going to miss. People are still in their homes watching movies and buying Disney stuff or whatever. I just don't understand. The comment was made to me by Keith today. And basically what Keith said is, Kevin, you dummy, you don't need to understand. But maybe the way that we're trading has to change a little bit for us to maybe not understand what's happening. But I think the protection might have to go on a little bit sooner because, yeah, we had a 20% correction in 2018, little stealth correction, right? But we haven't had that massive pullback. We had all the stimulus. We haven't paid the price for the stimulus. We propped up our markets. We got to pay that back sometime. We got to go through some pain and heartache. And so he said, you know what? Maybe if we don't understand it, we need to look at it in a different perspective. We don't need to run all the numbers. We need to look at the perspective of what it's going to do to artificial intelligence. I might call it a-hole intelligence, asinine intelligence. But if someone is creating a program that'll run off of coronavirus death and will send in a bunch of orders to sell off their positions, yeah, it's artificially moving our markets, but it's artificially moving our markets. So my thought process that's worked since what? 96? My thought process since 96 has to change. It has to change a little bit to better understand how to manage money on positions that they're going to be moved a little bit differently than they've been moved before. All right, let me keep going up here. Buffett won't reveal why he sold Wells Fargo. Well, he sold Wells Fargo because they have sucky management. Buffett says the economy is strong, but a little softer than 6 months. Yes, we have some softness in our market because we have a coronavirus, right? Buffett said public going enthusiasm for index funds. I just talked to you. Remember, I went about that. Coming down here at the very end. I went through this at the start with you guys, so kind of interesting. Complacency, maybe, right? Berkshire's cash pile stands at 128 billion. We'd like to buy more. Reaching for yield is really stupid. I couldn't agree more with him on that. That's him disking the yield curve too, by the way. Coronavirus outbreak shouldn't affect what investors do with stocks. Very interesting thought process. He talked about big companies would not be a profit if Berkshire were to split up. Berkshire the same with or without him. I don't know. Where else would I go for? Buffett got a smartphone. Finally has an Apple, maybe. Willing to admit their unusual conditions. Premium for buying businesses right now, which also, if I go back up to today and what we were doing. Where are we? Points to understand about the market. What would happen if we threw protection on right on the start today? What would have happened? Someone please tell me. Thank you. And I agree 100%. I'm going to change what you said just a little bit. With volatility, you would overpay for protection and lose both coming and going. I agree. I agree 100%. In fact, I made a quick call out to Stuart today and complimented him on, other than just one oops or one panic trade, he held his own. Jeff, nice to see you. You are going to have to go back and catch the first 20 minutes or so. I think it's going to be really important to you for that. So last but not least, it's pretty interesting. Some of what we do have for protection is sitting in the way that we have you in certain positions right now. So if we looked at Apple, Apple is down $14.97, but in our call positions, we lost less than half of that. For those that had some longer term call positions, we had your protection on. Cost basis of $2.95. No, where am I at? Those are our bear puts. Here we go. 230, 350 covered calls. Take your 1110, subtract the 4. You know, we lost $6.80-ish cents there. Same way for the other leaps. Ooh, that was a big hit. That one actually was, it's a little bit worse than the stock because those long calls are still in the money. But we lowered the risk from $27.80 down to $2.70. And again, we have till June of 2021. If I go to Boeing, Boeing was a big hit today. Boeing lost $12.48. If I ran to the calls there, they lost $4.55, $6.98, $7.53. Baidu, another big one that got hit today. Wow, only down $3.97, not bad at all. Calls losing $1.42, $2.73, $2. Obviously, it came back a little bit. Let me maybe go to some other ones. Let's go to Visa. Visa lost $10. Leap calls lost $4.50, $3.74, $3.29. What else could I go to? Disney. Did I do Disney? Big one in Disney. Disney does have protective puts on, lost $5.96, $2.39, $2.13, $2.11, $2.15, $2.96, $1.06. So because of the way we are positioned or have portfolios run, because we also have taken profits and moved to a stock replacement strategy, we lowered the risk and big down days like today. Since last year, we've taken some profits, and some people have asked why I'm not fully invested with their money. My answer, I've said over and over again, took profits, and something had to look appealing for me to invest. For positions I'm in right now, Apple, Baidu, Boeing, Ford, Under Armour, Facebook, Visa, Disney, 1, 2, 3, 4, 5, 6, 7, 8. What one am I missing? Apple, Disney. There's one I'm missing. And one more that I have a position in. Why am I not remembering it? So yes, my portfolio's got hit, and because I don't have a big portfolio, today was a down day for me. All right, so here we go. If I had to go back through things, recap of last week, really not too important. The biggest question for this week comes down to will the markets bounce back? And again, that's what this article is here for you to find out. Target. Thank you, Jeff. You're exactly right. Target. Will the markets bounce back this week? Keith found this article. It's kind of funny because a lot of things Keith asks me sometimes. Well, Kevin, what about this? What about that? Why wouldn't you do this? Why wouldn't you do that? I mean, I just walked you guys all the way through my technical analysis and why I did things. Interesting for Keith to find this article and go, you know, why can't you just point me to this article? And I'm like, well, it was written today, you know? I don't know these things. It's just, it's experience, and this is an experience that people go through. It's an experience why I'm not too worried through a year's period of time of what's going to happen. And also, I guess subconsciously, and I'm going to give the credit again for the 4 of you that I'm managing money for one of you to have the understanding to realize, hey, you've got me in plenty of cash, that we can weather these storms. I can still get his money out and still not mess up the methodology. Appreciate it. I can greatly appreciate it. All right, where our markets end this week, I'm going to go higher based on past history. No, past history did not come through for me today. And past history with the coronavirus might really screw up our markets tomorrow. Now, with that said, as I was noticing, right now, China's down 1%. The Nikkei is down 3%. Hang Seng is down 0.2%. But the pre-market for the U.S. Dow futures are up 249. The S&P is up 31.5. The Nasdaq's up 114, which means the Nasdaq's up 1.26%. The S&P is up 0.98%. And the Dow's up 0.89%. So almost 1% on the Dow and the S&P and 1.25% on the Nasdaq right now. Obviously, it's amazing. In one day, our markets went bearish. We're below the 50-day. We'll probably have a problem getting back up to 29, the round number. I'm going to show you something that's interesting, but pay attention to it here in a minute. The S&P, bearish as well. One day, one swoosh, we are bearish. And we are also bearish on the Nasdaq. So maybe I'm going to go back up to a little bit of a chart pattern that maybe is something I have missed. It looked like it was building possibly before today. Now, not building on ridiculously high volume. We had higher volume here and higher volume here, but something I might have missed. For a couple days, it looked like we were building. Now, that does not show the same for the S&P. We were not necessarily building on the S&P. Well, I guess maybe we were. So maybe it's the Nasdaq. Yeah, the Nasdaq was pretty flat. So it wasn't building on the Nasdaq, but it was building on the S&P and the Dow, but not at volumes that were unusually high, comparatively speaking. Well, the S&P had February 2020. I'm under the impression that we will probably end 2020. Where will we end February? I'm probably looking at us being down or going to be down 2%. It was what I expected originally. I went 2% for every week until the last week, and I said, you know, maybe February is not going to be a down month. Historically, it's one of the down months. March is usually worse because of tax selling. Now I'm back to my 2%. Earnings, Shake Shack bit the dust. Hewlett Packard did really good today. Macy's on Tuesday, and Home Depot, Dollar Tree, Salesforce CRM could be a big one. Wednesday, Fossil, Wendy's, Triple D, LB Brands, Marriott, Nettie's. Thursday for me will be the biggest day. VMware, Monster Drinks, and Baidu. Baidu is obviously one I'm watching. Floor and Sohu on Friday. Thursday for earnings reports, GDP. It'll be a big one. GDP will continue to push us higher on Thursday, or we're going to be in trouble. Usually this is not one of the better GDP reports. Here's everything I have for Warren Buffett that I went over with you. Pretty interesting article on the coronavirus could spark a 20% tech pullback, especially since it's now in Korea. Really comes down to, because it's in Korea, we're looking at a worry for chips and for displays. Bernie Sanders is the front runner because of how he raised our kids. Very interesting article. Definitely want to introduce it to you from a parent of 6 kids. It might be something for you to think about. When they say how we raised our kids, it's how the government raised our kids, not necessarily parents, but a very interesting article here. I would definitely say that you read through it. Article is given to me about GE and the Airbus on our newest position. Something for you to read to understand why, again, I looked at that leap position, and then I have what I started off with here today. With that said, are there any questions I can answer for you today? I know we probably have quite a few that might come in, but let me answer questions that you guys have for me today. And actually, if I can interrupt, will you be adding protection soon? And the answer is yes, probably. The short answer is I don't think this was enough of a swoosh for people to sell for tax selling, which usually occurs the first, second, and third week of March. Light selling towards the end of the first week, big selling the second week, big selling the third week. Well, Kevin, they don't pay their taxes till April 15th. Yes, but you need time for positions to clear, times for funds to clear that money, transfer times, and then you need the cash available just saying you're checking on the 15th. So yes, I'm still not of the belief that we've had enough of a sell-off just on today for people to have cash free to pay their taxes. So for the one person that already asked, am I going to be getting protection soon? The short answer is yes, probably. It's really an interesting, it's in an interesting time period for us as we're looking at things. Any other questions that I can answer for you? And hopefully that answered your question the way you asked it to me earlier. It's kind of funny. Next question came in. Are you going to be buying positions? So yes, we took profits last year on Baidu, Visa, and call it was some Disney, but what else did we do? Those are the two big ones that stand out. So yes, lead calls on Visa and rolling the remainder of Baidu is in the plans to take profits on Baidu and go farther out in time. So definitely yes. We also took profits on Apple, but I don't have the same. The numbers for Apple don't look as well as Visa, Disney, Baidu, Under Armour, Ford suck. Facebook still looks good. So actually, that's probably another one that we took some off on Facebook that we need to look at rolling out in time as well. Good question. So yes, we will be adding positions in portfolios that are cash rich, dollar cost averaging the leaps, and finding new positions to invest in that are now a bargain. So yes, good question. We got two more that have come in. Do you have a line in the sand? So yeah, so the line in the sand, the short way to say it, ADP, the line in the sand has already been crossed. So for adding the protection, yes, and then it comes to how much more protection can I add as individual positions fall through their support levels. So we need to swim. Yes, but we already knew it was going to be a volatile year this year. We didn't know it was going to be this volatile. And it's funny because Abraham typed in GL, and one anyone said, what about gold? So gold is a tell that has been appreciating since last August. But if you notice gold today, gold is only up $12, and at one point it was up about 26 or 28. So gold really pulled off, indicating, if you believe, like stock. Alrighty, am I back? Hopefully I'm back. Am I here, guys? Sorry about that. Looks like it was an audio lost on my side for whatever reason. So the short answer I was trying to go through, I liked gold opportunity. I don't actively trade gold. It's a headline asset that acts conversely to the stock market. So I don't trade gold, but I do like the idea that it was up about $26 or $28 today and came back to only being up 12, which means the gold bugs still think there's more potential or more opportunity in the stock market. So that's why it's kind of funny. It looks like two of you, Abraham, you typed it in on a mistake there, but GL or gold gave us some positive opportunities today, or some positive movement today. All right, anything else that I can go over with you guys tonight, or any other questions that I can spend my time? Kind of funny, just, all right, maybe it's funny for me. And Asia, China is now down 1%. The Hang Seng is now up 0.21%, but pretty, let me just make this comment. There are times I wish I was the average broker, where you guys don't hear from me. If you called, I hid behind a phone or an answering machine. I only sent stuff to you once a quarter. It's yes, my thoughts are that there are times I really wish I was an average broker, where it sucks to be you and good luck. But that's not what we do. We don't go into funds. For those who maybe missed the beginning, we're actively managing positions, buying protection, taking profits, stock replacement, so we keep your initial investment there. For the four of you that are managing, that are living off of your money, yes, we have cash available for you to still live off your money, to give us time to have things come back, to have something like a Boeing come back and a Baidu come back, to have Apple take off. We're still waiting on Under Armour and Ford for the small guys. It's there. The system works over time. The time frame that we tell people varies as new things come up. This is an election year. We might have a real shitty year in our market till Trump gets reelected. And if we have a Democrat get reelected, it'll undo all his business his pro-business and cutting taxes. We could have a serious drop at the end of the election. So we just do things a little bit different. We don't hide behind our phones. I can't tell you how it took me 4 hours to get today's stuff ready for you guys, and I hope it helps. But that doesn't mean there aren't times on days like today that I wish I was just an everyday broker. Just, it is what it is. So any other questions I can answer for you? If not, we went a little bit long. It'll probably take me an hour or so to get this up and running. For those that were a little late, we had, again, 4 of you that were a little late, missed the first 15, 20 minutes. I think that will be helpful for you all to listen to that came late today, but I appreciate you being here. Looks like no other comments are coming in. So guys, have a wonderful evening. Appreciate you coming, and I do hope this was helpful for you. I will look forward to seeing you guys tomorrow evening. Good night.